by Max Torres, who is the managing director of Plata Energy from the United States. Daniel Rahmat, who's a senior energy consultant joining us from Tehran, and Matthew Wright, who's senior freight analyst at Kepler Shipping. So we have quite a lot to talk about today. And one of the things that always comes up when we talk about energy demand, etc., is China and what's happening with China. Oil prices seem to be sort of staying within their range, above 70, below 75. They went up, they went down on dollar, on the fact that the Fed didn't raise interest rates. So where do you see, Max, I'm going to start with you first. Where do you see, particularly the United States, in this sort of new energy paradigm? Because obviously they are also exporting quite a lot of sort of almost record amounts of crude oil and products, some of it going to China.
Yes, Kate, thank you. No, indeed, it's going through the record productions, and I think the forecast has been in the last months about recession. That the talk has been what is going to happen with inflation. Inflation was going crazy, topping 8%, 9% in some cases. So the whole economic conversation was kind of gloomy. Looking into the next 2 years, becoming a recessive economy, and probably that perception has changed in the last last months. Let's say when the Fed decided, I think last week, that they're not going to increase the rates, and they said that they don't discount that they may be increasing rates in the future, but I think you immediately saw the reaction in Wall Street, in Dow Jones and Nasdaq. Dow Jones today is above 34,000. I think it's 34,500, and Nasdaq is close to 12,000. So you immediately saw the reaction, of the investors, and also you saw a little jump in the oil price, maybe for different reasons, but you also saw immediately a jump in the oil price, nearly 3% in the last 2-3 days. So probably the whole economic perception is changing. I think people are moving out of this catastrophic perception that we're going to move into a recession, and probably that we're going to have a sort of a soft landing in the economy. At the same time, as you said, big production, and I think that's another important factor here, because the price of oil is keeping in a range that is not going to affect inflation. So I think the whole set of indicators are good, and I think we are moving into the next month with a different perception that we had probably in the last year or so. That we were going, immediately into some kind of a recession, mindset.
Thank you. But, if you look at Europe, obviously, they've raised their rates and they've given an indication that there's going to be, the ECB is going to raise interest rates even further because they don't see, they don't see the target, the 2% target achieved. I'm going to move on to Matt, because we've got this new Saudi Arabian cut of 1 million barrels a day coming in July, in addition to the voluntary cuts that have already been announced since April. But at the same time, VLCC rates are rising, as we were talking about this earlier, and I think that people are interested in knowing why VLCC rates are, have risen.
Yeah, absolutely. It's a little bit surprising when you look at the broader fundamentals of what's happening in the market at the moment. So, normally around this time of year, you get a bit of a summer lull when it comes to VL rates. And actually, that was sort of progressing as you would normally expect. China was in peak maintenance last month, so you normally expect buying to be down, and just generally, it's a sort of a bit of a quiet period. I mean, I would say a quiet period in the context of where rates have been over the last year, so still pretty strong. And yet this week, as you mentioned, rates have absolutely rocketed. We're now at between $80,000 and $90,000 a day, depending on the type of vessel you've got, which is up from around 30 last week. So really, really quite substantial increases. There's a couple of things going on there. I think there was some short-term tightness in availability. There was a few fixtures coming out of the US Gulf, and the US Gulf really is a very, very sensitive market in terms of the reaction on VLCC rates. It's become a much, much bigger player in terms of the impact it has on overall VLCC market. The ton miles generated from the US are actually, just shy of what Saudi's achieving. So, even though exports are, at less than half of what Saudi is, just the voyage distance. So that is definitely a factor. Also, I think the other thing is that China's continued buying during maintenance. And even though they're not running as much, so that sort of the impact has been a build in inventories. And crude inventories are up 30 million barrels a day this month. They're at a 2-year high. So I think the main takeaway on the VLs is it's a great it's a great period at the moment, but it's not going to last all summer. China has more than enough crude in storage, and if anything, it could sort of result in we're sort of delaying the lull, so to speak.
Of course, we also have the production rising from the countries in Africa. We have West African countries. You've got Nigeria, Angola, which are increasing their production, and they're the ones that weren't really producing a quota. They want to expand their, at least Nigeria wants to expand its export infrastructure. But moving on the same kind of subject, I'm going to move on to Iran. And Danielle, I wanted to ask you, there's been a lot of chatter about the possibility of a deal between Iran and the United States. The wording is very interesting. Is it a temporary agreement? Is it something that is not part of the broader nuclear deal? And there was Iran has continued to export oil despite the sanctions, and from what we understand, even their floating storage is much less than it used to be. So Iran wouldn't really be in a position to flood the markets anyway. So could you tell us where you see it from your point of view, sitting in Tehran? What are the prospects of an agreement? Is it overblown? Is it, is it likely to happen anytime soon?
Yeah. Hello, everybody. I think that the nuclear deal, despite Iran is exporting so much crude, maybe 1.3 million barrels per day, something, mostly to China, the nuclear deal is still an important bottleneck for the future of Iranian economies and its politics, everything. Because Iran is now monopolized its export, exclusively exporting most of its oil to China. And Iran needs to diversify its markets because the leverage this issue has offered to China is very huge. It means that Iran cannot survive in any other way than the China, and that will reduce Iran's political and geopolitical capacities in the region. This is what the Iranian government does not want at all. At the same time, Chinese companies are not investing in the Iranian oil and gas sector, which is becoming a crucial problem, a critical issue for Iran right now. As you know, maybe we have talked before about that Iran is that the crisis in the Iranian gas sector is looming, and also Iran needs huge investment in its upstream sector. And there are many other technical issues we can discuss. But the essence of every Iran's effort for getting to a sort of deal with the West is to diversify its markets, getting more investment and things like that. But about the reality of the talks, I think there are some steps we need to look forward. If these steps are realized, if Iran and the US take these steps, we will know that they're going on a right approach towards making a deal, whether it's a temporary one or a long-term one. The first of them is releasing Iranian assets in Iraq, Korea, elsewhere, and also releasing the American Iranian citizens who are present here sentenced as spies or something. So I believe if we look, we need to wait some maybe 1 or 2 weeks to see what is going on in the negotiations regarding the frozen assets. And I hope some kind of deal is made, because that would be both good for the Iranian people and also for the security in the region. I think the Iranian-Saudi rapprochement would be a very significant positive sign that Iran at least has satisfied or somehow reached the sort of agreement with its neighbors, which were known in the Iranian domestic politics as a sort of major obstacle towards making a deal with the West. So I'm optimistic about this.
I was going to ask you about that, actually. Yes, the rapprochement, which was brokered by China. So it comes back to China, and we saw a few days ago that there was a huge presence of Chinese business in Saudi Arabia. We're seeing some effort to, to sort of reduce tensions in Yemen. It seems that the ceasefire seems to be holding. So I think there's a positive outcome. And of course, we now have the Saudi Crown Prince in France. Which there's a lot of movement. The sort of the geopolitical aspect is really interesting, but
right. And I think there are many fields Iran and Saudi can work on together, cooperate. For example, we have many shared oil and gas fields with them, so that would be a great opportunity to work together. And if you tie the benefits and the interests of the two countries, it would be harder to make it broken later.
I mean, one of the issues that came up was in the IEA's medium-term report is that of the, as demand declines by 2028, they see demand growth declining to about 400,000, and that the additional supply that will come in a shrinking market, apart from the core Gulf states, will come from Iran and Iraq, but Iran is not going to be a major contributor. It's going to be mainly from Iraq. But I wanted to ask, to go back to Max about where we see production growth coming from the Americas. For example, you've just been in Latin America. So could you tell us what the prospects are? Because we keep saying Brazil, Guyana, offshore. Where do we stand in terms of supply growth from that region?
Yes, indeed. Indeed, the obvious candidates are Guyana. Guyana, is set to be producing 1.2 million barrels, in 2027. And it's going to grow probably to 2.5 million in the next, subsequent years. So, Guyana probably is the country that's going to grow most. But Brazil, obviously, deepwater Brazil is going to continue to grow. They have a target of 4 million barrels. So I think the production growth that we're going to see for sure is going to be Guyana and Brazil. I still have some hopes that Venezuela will recover eventually. I think we have primary elections in Venezuela, in a couple of weeks. Maybe we'll start seeing some indications of some changes there. Maybe Venezuela could be showing us some hope of recovering supply in the future. Venezuela has the capacity to produce additional 2 million barrels, for sure. Right now it's producing less than 500,000. So, I think the usual, candidates are Guyana and Brazil, for sure. I think the prospects are Venezuela and Mexico. I still hope that Mexico can also recover and go back to their 2 million barrels, not what they used to produce, historically. But unfortunately, that needs profound changes, especially in Venezuela. I don't see Mexico taking the road, of recovery, unfortunately. So, if there is a political change in Argentina, there's elections in October. Apparently, we're going to see a government from the right, in December. So probably Vaca Muerta could be another candidate for, some supply, and they are finishing a new pipeline, for gas production. It's going to be domestic first, but I think eventually it's going to provide some LNG. Is right now, being exported to Chile. So I think Vaca Muerta could be also another candidate for, future supply in the Americas, in general. But again, Brazil and Guyana are the sure bets, for Latin America.
I'm going to, you just mentioned LNG, and we were talking about VLCCs, and we're talking about oil demand growth slowing, but LNG, I think, has a longer, gas is going to have a longer shelf life in the transition. Right. Matt, I was going to ask you, what happens to all these, as we transition, as we start talking about exporting more green hydrogen, green ammonia, blue ammonia? How do you see the tanker market developing? What happens to all these VLCCs and, the dirty and clean tanker? How do you see that developing?
I think they've still got a very long life. I think the transition fuels are going to play an important, an increasingly important role. And we've got, new vessels being built to facilitate that. But we're still a way away from peak oil. And then even post peak oil, it doesn't mean it just ends. We've got we've still got a very long period of that decline. And so, actually, if you look at the tanker order book at the moment, it's very, very low, historically low. So for VLCCs, they still got a very long life. People are taking into account the fact that, peak oil is coming, and people are unsure around the type of vessels to order in terms of what sort of future fuels we're going to be burning. So that's part of the reason why we do have a sort of a low tanker order book, particularly on the VLCC. So I think VLCCs actually have a very strong outlook for the next 2 to 3 years, but inevitably, like the whole refining system, we're going to have to manage that decline in terms of incremental capacity, over the coming years.
And of course, we need to decarbonize that sector as well. And it's, it's not happening fast enough, I don't think.
Yeah, absolutely. I think, we've got in the EU, we've got the ETS coming in from January next year, which is going to add, I think carbon's, last time I looked, was around $90 a ton. So extremely high costs that are the only option for ship owners is to pass that on. So we're moving into a world where you're going to have to accept a higher cost for the transportation of goods. So, from an emissions point of view. So I think that's just going to be, baked into freight rates from next year. What that will form a factor in terms of decision making around what fuels owners are choosing when they're ordering new vessels.
Yeah, I mean, that brings us to sort of talk about what's happening in the carbon market, the carbon trading market. You've got the EU's the carbon border adjustment mechanism coming into effect, and that's obviously going to impact products and and whatever's being shipped into imported. And we saw a story, it was on today's digest, about Saudi Aramco buying carbon credits at the largest ever auction. Does any of you have any expertise to talk about whether this is the way forward? I mean, is it really is it going to reduce emissions, or is it just shifting emissions from one place to another? Who would like to take that one on? Anybody, please? Or we move on to something else?
I'll dodge that one as well.
Well, I mean, it is one of the things that I've been reading about a lot is that, we've got this, huge expansion. We're getting more investment this year, according to the IEA's investment report. We're getting more investment in renewables and solar than we are in oil. At the same time, they say, there's enough investment at the moment to meet rising demand. Hang on, where did that go? So, okay. I'm going to, but the grid is not actually, we've got all these new wind projects, but the grid can't accommodate them yet. So, all right. So there's a survey question, and we're going back to China for this one. So, optimism in higher energy demand from China after a 15% hike in refinery throughput in May is a sign that the second half of the year is going to be tight for oil markets. And I suppose this goes back to, do you agree or disagree? And I suppose it goes back to the fact that both the IEA and OPEC have a very strong demand growth in the second half of the year of over 2 million barrels a day, which I think has surprised quite a few analysts who say it may be a bit too much given China. So this is the survey question. So optimism in high energy demand from China after a 15% hike in refinery throughput in May is a sign second half of the year is going to be tight for oil market. I think we spoke about this earlier. And I think, Matt, you mentioned that they were coming out of maintenance refineries. So is it a real indicator of demand, or is it just that they've come back from maintenance and they've been given the refiners have been given a higher import quota?
Yeah, absolutely. I think it's a combination. So they're still not even out of maintenance, so there's still more to come. But I think they have been. I would say, for context, Chinese maintenance this year was not as severe as it's been historically for a couple of reasons. One, the absolute level of refining capacity is higher this year than obviously it's ever been. New refineries online, and the offline share was not as large as it has been in the past. So I think there's also that part of it is that when you normally say spring maintenance in China, you expect it to have quite a severe effect, but actually we're hitting still new record levels in terms of refinery runs, like you said, around 15 million barrels a day. So, but I think we also need to be very cautious about the second half of the year for China, because, we are seeing some red numbers coming out of the country in terms of its economic outlook, its industrial outlook, commercial outlook. So there's a lot to sort of be wary of when we're looking at China. I still think the post-COVID bounce is not proved to be as substantial as I think people were expecting. And turning to the freight market, as I tend to do, I think we should be wary about the second half of the year in terms of expecting too much from China. I think, like I said, there's very high inventories, and I think they're gonna draw on those more than on the import side. But I think there's we're definitely not suggesting that there's anything any negative contraction within China, but I think the growth is going to be less impressive than people initially thought.
We talk about China, but of course India is now sort of about to overtake China as an oil importer. Well, not the same amount of oil, obviously, but I mean they are in terms of growth. So what about Indian demand? I mean, where's that pushing the market? Is that going to be a significant driver as well? Because we talk so much about China, but not so much about India.
Yeah. I mean, absolutely. I think India's domestic demand is hitting new record levels. Imports, it's obviously been probably the biggest story in terms of crude imports over the last year, in terms of what they're taking from Russia and the way that they've single-handedly changed the tanker market in the last year. So I would say, India is over the last year been a much bigger factor than China in terms of creating change, definitely.
I'm going to come back to you now, but obviously a lot of the oil going to India is Russian oil, because it's discounted, and I wanted to ask how is that affecting Daniel, because Iran is also a big supplier to both China and India, or it was a supplier to India, but I think they've been sort of squeezed out of the market a little bit.
Yeah.
You used to be an investor in upstream in Iran. So there are relations. Yeah, sorry.
Yeah, India used to be one of the major oil markets for Iranian crude, and later, after Iran was sanctioned by the US, Iraqi oil was somehow replaced by Iranian. So Iraq surpassed Iran, and Indians prefer to replace the Iraqi oil with Iran. They had technical and also logistic reasons. But later, as you just mentioned, the Russians started to export huge amounts of discounted oil to India, and that made a significant problem for Iraqis because they had a lot of oil and they have ambitious plans for increasing their production, and they're investing a lot in their upstream, and now they're facing problem for marketing their oil. I think India would be a very critical issue for both Iran and Iraq. If the sanctions are removed, Iran is going to flood the Indian market, maybe with discounted oil, because they just want to go back to the market. But they also, the Iranian IOC has also considerations and concerns about if they export discounted oil to India, they're going to expect discounted oil forever. So the policy, how they should deal with India, is an important issue, and also the Pakistan, which is between Iran and India, is just another issue. Pakistanis are starving for gas, but they have no money for paying. They're also asking for Iranian crude and other refined products, even under the sanctions. They have some agreements for barter deals with Iran for refined products, but they're not able to pay that. And you know, Iran has security concerns with Pakistan, and they're also another important issue Iran needs to consider when it wants to go back to the Indian market, because they need to keep their neighbors satisfied. So I think the Indian market's demand is going to increase based on the last year's report of OPEC. I think they're going to continue increasing their demand by 2045 something. So I think India is going to be the most important player in the region, because their policies towards the market is less based on resiliency. They're mainly considering the price, but in the Chinese case, mostly they're considering the energy security and their economic resiliency. So I think the Indians are going to be another important player without political concerns, less political concerns they have than Chinese. Yeah.
Thanks. Is Max? Oh, Max, you're still with us. I wanted to ask you, sitting in the sort of the main oil hub of the United States and relations with China, between the US and China. I'm going to give you the final word before we go to the results. So very, very quickly, what do you think? Do you think these tensions with China are going to be eased with Blinken's visit? What is the view from your end, from your part of the world?
I think that I think this visit is going to try to ease the situation between the two countries, but I don't think that that's it's going to change in the short term. Or I think these tensions are going to keep increasing, and I think we're going to see further escalation of these confrontations, especially in the light of what's going on in Taiwan and those situations around Taiwan especially. So I think this is also related to the Ukrainian war as well. So what position China is going to take with respect to the Russians. So I think this is a different end type of visit, trying to mingle between the situation between the Russians and the Ukrainians. But to be honest, I don't think that this visit is going to make a lot of difference.
Thanks. I think I'm just trying to see if the survey result is, yeah, there it is. Okay. So the ayes have it. It's 78% believe that there is optimism that the hike in refinery throughputs in May in China is going to lead to a tight oil market, and 22% disagree. So that's where we are. I want to finish off. Thank you all there's so much more I'd love to talk about, but we're running out of time. So thank you very much for taking part today, and I hope to see you again the next time.
Thank you, Kate.
Goodbye.
Bye-bye.
Thank you.
Goodbye. Have a nice day.
Thanks.